Done.
Cool. Are you looking to grow revenues, increase profitability, or obtain financing? If so, you came to the right place.
Running a business is all about leadership. How do you become a better leader? Learn from the successful entrepreneurs and business owners how to lead your organization more effectively. That's why we created Leadership Live at 8:05, Talking Small Business, to help you succeed with your host, Andrew Frazier, Business Growth Pro and CFO and founder of the Small Business Pro University. Every Tuesday evening at 8 p.m. Eastern, we're joined by experienced entrepreneurs and business owners who share their secrets to success via live stream. Also, every Friday morning, we release a new podcast episode. Either way, you will learn about developing your business leadership skills from our roster of highly performing guest experts. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbprou.com.
Good evening, everyone. Welcome to Leadership Live at 8:05, Talking Small Business. I'm excited to be here once again and talking about small business, my favorite topic. And thank you all for continuing to join us. And really, I have an exciting show this evening. Tonight, we're going to be talking about business financing, very important topic, especially this day and age. And really going to talk to someone who's done some great things on the business financing side. And let me just do a quick intro of him through a video, and then we'll bring him on and, we'll get talking small business. Here we go. We've worked together for several years now. Alex has lent my clients billions of dollars. Yes. So he's a good guy to know.
Once again, my name is Alex Marin. I'm Vice President of Commercial and Industrial Lending, Spencer Savings Bank here in New Jersey.
You've got a wealth of experience. Thing that's key that you think someone seeking financing should know?
Yes, one word, preparation. That's probably the most important word, because I think a lot of people come for financing unprepared, and that's where it really goes awry. So I think when you join teams with somebody like Andrew, who helps you prepare for that moment, there's a much better chance or higher possibility of actually being approved and getting that financing. So again, like Andrew said, I've given millions of dollars, not given, excuse me, less preparation. That is really what you need.
Okay, good evening. So we're going to talk about the secret to financing your business. Got Alex Marin here, who financed many businesses, so he knows what he's talking about. So first, Alex, thanks for taking time out of your busy schedule to join me tonight.
No, Andrew, thank you very much. I appreciate the opportunity.
Okay, great. And I was just talking to a friend of mine who has a business, and we collaborate. And he was like, "Yeah, I went to buy a building," and I was like, "Well, why didn't you call me?" And he ended up not being able to get financing he needed. I was like, "You should have called," because it's not necessarily easy to do it, but if you have someone to work with you. And then also it's about relationships. So we'll talk more about that. But before we do that, can you take a few minutes and introduce yourself? Talk a little bit about your journey of how you got to where you are now.
Sure, absolutely. So currently, I am the Vice President of Commercial Industrial Lending for Spencer Savings Bank. I've been here at this organization approximately 6 years. Prior to here, I was with PNC Bank, also in their commercial division. And prior to that, I worked 8 years also in commercial lending and technical assistance, working with the SBA, the New Jersey Economic Development Authority, and UCEDC. So over 20 years of working with business owners, entrepreneurs, established businesses, helping with acquisitions, mergers, and the whole time helping primarily with financing. I actually started my career as a small business owner myself. For 10 years, I ran a travel agency. After that, I moved on to helping other business owners with kind of their struggles of either growing their business or getting financing, and eventually got to the point where I became a lender and started helping with direct lending through banking institutions.
Excellent. So, you have a wealth of experience. It always helps to have been sitting in the seat as a small business owner when you're talking to small business owners, because one of the things I like about working with you is you understand what it's like to be a small business owner and sort of what they're thinking about, and the challenges they may have. You understand and try and work with them and work with your organization to get the best result possible for everyone.
Correct. So in the initial clip that you showed, I mentioned the whole fact of preparation, and I continue. That's definitely the thought process, is preparation for the business owner. What the banks do and the way they look at things, there's really nothing magical happening behind some curtain or in an office. We all pretty much look at it the same way. We're looking at debt service, collateral, cash flow, and sometimes this type of verbiage may the small business owner, the entrepreneur, or the large business owner may actually not know exactly what we're talking about, but it's nothing special or different. They do it day in, day out. They may just be calling it something different. So again, the preparation for when they come in to speak to a lender, it's just important for them to be aware of how the lender is going to be speaking to them and make sure they're going to be understanding and they're on the same page.
Okay. Excellent. So now, one of the key things that we talk about a lot is really, at least when I'm going to talk to someone about their financing, is their tax returns.
Correct.
And, one of the key things is, when you're looking at someone's tax returns, what is it that you're looking for?
Sure. So an important thing about tax returns and bankers is, I tell anybody who's met with me before, is that us bankers, we're like historians, right? We're always looking backwards. And the backwards that we look at are tax returns, historical tax returns. So when you're looking at financing, the bank, the immediate thing they're going to ask you for is 3 years of business financials. That's where we start. So again, we go back in time. But what we're looking for on those tax returns is really gross sales, net income, how much retained earnings there's in the company. So these are all very important factors for the lenders or the institution that will be hopefully providing financing.
Excellent. So now, one thing I always tell people is, if you don't have your tax returns in, don't even waste your time or their time trying to get financing. How often does that happen, and what do you do in those cases?
So it's more often than not. And think about it. Look where we are today, right? We're in March. Some people are not going to have their tax returns ready, or because they're going to be on extension to maybe October. So what happens is, when the bank is judging you right now, we're actually going to be judging you on 2020 numbers. Even though you may have had an outstanding year in 2021, we're only going to use tax returns. So what I tell people is, if you're looking for financing, it's very important to speak to your accountant, your CPA, whoever is doing your financial paperwork, to make sure that they're in line with what your goal is. Because if you're in line right now to purchase a building and your tax returns are not going to be ready for October, and you had a great year, unfortunately, yes, we can see it from your profit and loss and income statements and balance statements. But if we don't have your tax returns, it's going to be very difficult for the bank to make a true judgment of how much they can offer you in financing, because we're looking at 2020 numbers. 2020 might have been a great year, but think about that. That's a year and 3 months, right? So we're 15 months out with the numbers that we're using for your business. So it's very important that you're aligned, or your team is aligned, especially your accountants, with what you're planning to do.
Okay. And why is it that you can't just go with people's financial statements?
The problem with that is that they're internally prepared. So there's a lot of things that accountants do for tax implications, right? So there's lending, and then there's tax implications. Most accountants look for helping you with your tax liability. So it's important for them to save you on that. But which may mean sometimes not showing a profit, which becomes problematic for us lenders, because that's what we're looking for. Or more importantly, holding money within the organization, which means you did have a profit, but you distributed it out to the ownership as a distribution, which is fine, perfectly legal. And again, a tax liability effort to lower your tax liability. But unfortunately for the banker, negative retained earnings may mean that the business looks insolvent, even though they may be having profit year after year after year. So it's very important, again, that's why I say everybody's in line on what your goals are.
Yep. No, definitely different. Very important. Very important. So, and one of the things I always say is nobody ever overstates their tax returns. So if you're working with the tax return number, it's either that or better.
Correct. And the tax return is something you're handing into the federal government. So that's really where we're using as the gold standard, that, hopefully you are not using any fudge numbers or incremented or decreased numbers. So that's why the banks rely so heavily on those numbers. Not just that, but the accounting services, the accountant, the CPA who are doing those tax returns, they're signing those tax returns. And they're making them legitimate, that this is the true and factual numbers there. So there's a lot more people on the hook involved in those tax returns. So you want to make sure they're right.
Yep. No.
When you're doing internal, let's just say you're using a QuickBooks program, all you got to do is press that little button, right? And it shoots out your profit and loss for the year, your balance sheet. But those are unadjusted numbers, because there are things in those tax returns that your account can move out, such as depreciation, interest expense, that us bankers will add back, but they're taking it out as your tax liability. That really won't always reflect on those year-to-date in terms.
Good point. Good point. So so definitely tax returns are key. And, I think you've probably heard it's, some of the people on, but definitely appreciate you guys on. That's why we do this. So just want to say hey to Karen and Christy and Daryl. What we, I always talk about in my book, Running Your Small Business Like a Pro, is, really the key to accessing capital is you got to pray. On your knees is always good, but in addition, you got to P for prepare.
Yes.
Which we talked about. R for research.
Correct.
Doing your research on who you should go to for financing, what type of financing you need,
exactly,
and really how much money you need, because a lot of people don't even know how much money they should be asking for, and that doesn't look good from a credibility standpoint. So,
So I'd like to add a little piece to that, Andrew.
Okay.
That whole piece of knowing how much you're going to be asking for, because a lot of times, especially when it comes into real estate transactions, I get a lot of questions like, can you pre-qualify me? What can you qualify me for? And unfortunately, that's where kind of the personal financing side, or the residential mortgages or lines of credit that you may have received in the past, do not intersect with commercial lending. So, and you're bringing that information and unfortunately, it doesn't work. There really is no pre-qualification or qualification number that the bank wants to see that you're coming to us prepared with an actual number that works for you, not so much for us. That also being said, we want to make sure that, you're not coming back to the well. So probably one of the biggest issues that happens with banks is when we lend money, let's just say it's a construction project. We lend you X dollars according to your proposal, your budget, what you're going to do, and suddenly you come back to us and you need more money because you ran over budget. So that really comes into an issue with the bank because we feel that you were really not prepared to do this, or you really didn't know how much money you needed.
Okay.
So that preparedness and coming to the table, knowing your number, I always say, know your number. When you're coming to the table, be ready for what the number that you're looking for. That's construction. It could be a working capital number, right? If you need a line of credit, you don't come to the bank and say, well, what can you give me? That's not the way you want to start a conversation with a banker. You want to come to them and say, I have XYZ contracts. I'm going to need XYZ in raw materials to manufacture this amount. So I need $100,000 to purchase inventory, to be able to produce for these contracts. That's what a banker wants to hear. They want to hear you coming in confident about the number you want, and hopefully they'll be able to provide that to you.
Right.
And also being realistic, right? Not walking in and saying, I need $1 million. That also doesn't work because you need to be realistic of where you fall. Well, how much did you make last year? Gross. Well, I sold about, $90,000, but you need $1 million. So you also have to be on target of what the capacity of your business is.
Yeah, no, very, very important. Definitely, understanding that is key. One of the things that I always think about is, most people, like you said, ask for too much. And the other thing is they don't include working capital.
Correct.
Which is something important. So can you explain what working capital is and why it's important?
Sure. So working capital usually relates directly to the capital that you need to run your operations on a daily basis, right? Could be payroll, right? Your employees. If you're a service industry and you have work that comes in, you have to have employees to manage that work and service the client. So, or it could be, if you're a manufacturer, it could be raw materials. Maybe if you're a wholesaler, it's not raw materials. It's actually buying from the direct manufacturer to be able to resell. So that's really what working capital is. Anything that really goes above more than 12 to 18 months, that's really long-term debt that you should be looking at. You should be looking at term debt for that. So in other words, you're buying a truck, something you're going to finance for multiple years. Working capital is always short-term financing. Now, I always talk about something that not too many people talk about. I say permanent working capital. When you start a business, there's money that you put in as the business owner or the entrepreneur or the investor that really stays in the business, that you're really not going to be able to get out, because when you put it in, you make the product, you sell it, you got to buy more raw material to bring it in. So there is permanent working capital that goes into these businesses. But normal everyday working capital or working capital lines of credit financing are really for short-term financing.
Okay, great point. And that actually makes me think of something else that a lot of business owners run into, and that's really their asset liability management and mismatching their financing with their assets. So can you talk a little bit about what that is and how it works?
Absolutely. So most people, the first thing they go out and get, because it's probably the easiest of the financing, is working capital lines of credit. They'll go out and use that line of credit to buy a truck or a piece of equipment. So that's not really what a working capital line of credit is for. We just mentioned it's really for short-term financing. When you're going to buy equipment, you get an equipment term loan. Banks also offer something called an equipment line of credit. It's something you're pre-qualified for as a regular working capital line of credit, but it's for the sole purpose of purchasing equipment moving forward. So you're making an estimate of what in the future you may need, whether it be equipment, vehicles, but long term. They pre-qualify you for a dollar amount, and when you're ready to purchase, you send an invoice to the bank or lending institution, and they term out to a certain period, whether it be 3, 5, 7, 10 years. And then you have a stabilized monthly payment. But it's very important that you don't mix those two up. And a lot of times when I'm meeting with people, they're trying to get themselves out of some trouble when you get a working capital line of credit and they buy equipment. What ends up happening, the pay down of the principal becomes very slow. Banks like one thing. We like to get repaid on time, not before or not after. So it's very important that the repayment is happening and the pay down of lines of credit is also happening. Like I mentioned, it's a short-term financing vehicle, and it needs to be paid back so the bank sees that the line of credit or working capital line of credit is being used appropriately. A lot of banks nowadays are putting in cleanup periods. That means for a certain amount of days out of the year, that line of credit has to be brought down to zero. So, and that's really to manage the mismanagement of these working capital lines of credit. My institution personally, we have a 20% pay down. So if you have, we'll use a number of 100,000. If you have a $100,000 working capital line of credit for 30 days out of the year, you got to bring that line of credit down by 20%, or excuse me, to 20% utilization, which means if you have the full 100,000 outstanding, you just got to bring it down to 80,000. So it's very important that you realize when you're having the discussion, these are the things in the fine print that sometimes you oversee, and then you find yourself in trouble because you went out and bought a truck, but you don't know that in a year from now, that line's got to be at zero. Now you got to pay off the whole truck overnight. So that's why mismatched financing does not work and can get people into trouble.
Okay. No, that's great. Very important to understand. And a lot of business owners don't really, haven't really heard that or don't really know much about that, but it's critical.
It is. It really is. And again, like I tell you, most banks are using the same type of theorem on how they want these financing vehicles to be used. Are they being explained all the way? I would hope so. Sometimes, the client he doesn't hear that part. He hears the part of lowest rate, biggest dollar amount, and he says, just give me the money so I can run. So you have to listen to everything that's going on when you're having the discussion with the banker, and read the fine print to make sure that what you're getting is going to work for what your needs are.
Okay, great. So I have a question from the
Sure.
audience. So I figured, why don't you take a second and address this, because something people don't usually expect, but you're always going to ask for it.
Sure. So the 4506T is just a document that allows us to get the transcripts of your tax returns. And the reason we do that is we can actually move forward on an annual basis and just order transcripts ourselves. It's given us the legal ability to pull your transcripts from the federal government to find out exactly what's on there. So we don't get it in the same format, the nice format that you get when you do your tax returns. It'll just be a bunch of numbers line by line. It's the same information, and it just gives us the authority to actually pull that from the federal government directly. So when you sign that document, that's what you're doing. You're giving the right to the lending institution to actually pull your transcripts for the loan. Be advised, just because you sign it doesn't mean the bank is using it. So
Right.
A lot of times we'll actually request one and keep it on file. And then pull your transcripts if we see something. Most of the times you're doing commercial lending, they require that you actually disclose your financials on an annual basis. For lines of credit, maybe a renewal. For commercial mortgages, it also may be just a review of the credit worthiness of the operations you're running. So we'll hold that document on file to actually be able to pull a transcript in case for some reason the client becomes radio silent. So it's very important when you sign that document that you understand what you're giving the lending institution the right to pull that.
Mm-hmm. And the other side is your tax returns probably need to match what.
Well, I mean, I agree with you. I always, I give everybody the benefit of the doubt. So I would assume, I would never think different of that. Remember when the banker's having the conversation, one of the key pillars of lending is character. So if you feel the person you're lending to is not falling in line with the character of, trust, I would probably not do the loan. So when things like that, so I always say when you fill out the applications, when you fill out personal financial statements, that's a big thing, right? The personal financial statement, because that's where we're really going to match up what you're telling me you have in assets and liabilities compared to what we're going to pull on your credit report. So that's really the first character test or first litmus test to know the person who I'm lending to, how is their character, right? He's telling me he has this and he owes this, and we pull his credit report and this comes up. So you always want to make sure those are really transparent and match over perfectly.
Okay. Great point.
Yeah.
So definitely, we're covering some great stuff. We'll take a quick break now. We run this through the Small Business Pro University. So going to show you a quick video. So in case you don't know what it is, you can know what it is. And we'll be back in a sec. Do you own your business or does it own you? Is your business growing and are you making enough money? As a business owner, there are so many things you need to know to become more successful. Hello, my name is Andrew Frazier, the Business Growth Pro and CFO. I created the Small Business Pro University for you. Small Business Pro University has self-paced, dynamic, multimedia learning experiences created by more than 20 instructors who are business owners just like you. Small Business Pro University will empower you to become a masterpreneur by learning the secrets to creating a successful enterprise, to go from working in your business to working on your business. Take advantage of our strategic coaching program, or just simply choose the courses that you need. At www.sbprou.com, we will empower you to thrive and not just survive, and make more money in any business environment. Welcome back to Leadership Live at 8:05. I'm here with Alex Marin, and we're talking about small business financing. Talked about praying for financing, preparing, researching, assembling, and yielding. So let's talk a little bit about the research side, because I think business owners really don't have a good handle on it, and it's understandable, but it's important. So, hopefully we can shed a little light on it, because, you've worked at different institutions that work with different types of people. So maybe you could talk about, what type of, how each stage of where your business is and how you grow makes, you have different financing options and
Correct.
considerations. So maybe if you could walk through the progression, that would be really helpful for people.
So when I started my career, I started in what's called economic development, which is a vehicle for the helping of entrepreneurs, communities to evolve and develop. And usually one of those pillars of that is businesses, right? Entrepreneurship. That's a really important pillar of growing a community or developing an economy. So the first key word that I could tell you that you should look for as an entrepreneur or somebody who's starting is those two words, economic development. Google it. Look up for your exact area where you're starting at, the town that you plan to start your business. See what they have available. Some of the larger towns have an actual economic development office. After that, go out a little further. Go to your county and look for those words, economic development, under your county. After that, go to your state. After that, go to the federal level. And you'll see each time you go out, you'll find a slew of resources that may be able to help you in depending what business you're in, or depending what type of help you need, because we're talking financing today, but there's a tremendous amount of help out there, whether it be for marketing, whether it be for operations, whether it be for bidding on government contracts. So if you're really in that first level of business, entrepreneurship, starting out, first 3 or 4 years, that's where I would start. Banks are very shy. They're very gun shy with the entrepreneur. The first 3 years of business, as I told you before, the banks were historians. So if you don't have the history, it's very difficult for them to get a comfort level to be able to lend to you. So at the beginning, you may need to use alternative financing, whether it be subsidized from the federal, state, municipal, or county government. So it's important. Economic development, keywords. After you graduate a little bit and you find a little bit of sustainability in your business, and maybe you're looking to grow, that's, I think, where you start looking at financing options, or what we call commercial financing with banking institutions, right? They're the ones who are going to be offering, lines of credit, or very quickly, business credit cards. That should be your initial financing that a business gets. It's a small line of credit for you, So the bank where you're doing your banking, where you're depositing, where you're taking money out, where you're paying your vendors from, where you're paying your taxes from, that institution is going to see what kind of influx of money in and out that you have. They're going to be the first ones who will probably open up credit for you. But once you open up that door, then you'll be able to go to the other institution to get some. Think of it as your first credit card when when you graduate high school or you're in high school. Nobody wants to give it to you because you've never had one. And then finally, when you get one, suddenly all you get in the mail is a bunch of them. And now every bank is throwing it at you. It kind of works very similarly in the commercial financing world, especially at that mid-level where you first get something. You'll get a lot of opportunity for other institutions to be looking at your lending. And if you also have the opportunity to not only get private lending or commercial lending through a banking institution, but you also have that opportunity through that economic development faucet, right? Whether it be SBA, whether it be New Jersey Economic Development Authority. And again, like I said, some counties have small financing grants or programs. Also municipalities, depending on where you're at, they may have small lending programs available for you too. After what we just gone through with COVID, there was a lot of programs that were initiated that I probably don't even know about today. But it's important to do that research and look. Once you graduate, I think, to the latter part where maybe you're looking at merging, purchasing, maybe a vendor, right? Your business has grown that now you want to purchase one of your distributors or one of your manufacturers, or maybe there's succession planning, right? You want to give your business that you've grown for 45 years and you want to retire, but you want to give it to your manager, to your siblings, to your children. So there's financing involved for that also. So there's a very wide spectrum of what's available to you depending on what stage of your business. I think that's it.
Okay, great. No, I mean, definitely very helpful. I think one thing you said, and I say to a lot of people is, when you're starting out, usually the last place you want to go is to a bank, because there's a lot of other options that are more tailored to where you are. Depends on, every situation is different. So Absolutely. It depends, but in many cases, if you're starting out and you're starting out fairly small, there's other alternatives.
Correct.
And
Correct.
And we'll talk more detail about that because I want to make sure we go into it a lot more. COVID made me a liar because I teach an Access to Capital webinar for the SBDC, and one of my slides has this red circle and a line through it. over the word grants, because many times it used to be like nearly impossible to get a grant, but
Correct.
but that's changed. So
Yeah, it has.
definitely. But if you're not in business yet and
Yeah.
you want to get in business, it's still very hard to get a grant before you start.
Correct. And, it's probably made me a liar too, because for many years when I started my career, I did a lot of teaching and courses regarding entrepreneurship and financing for entrepreneurs, or in that first stage, we'll call it. And I always talked about grants as a unicorn, right? Everybody talks about it, but nobody's actually really seen one or touched one. My cousin got a grant, and it was here and but that was really, it was very difficult to find it. Oh my God, I'm really dating myself. There used to be some books that at the back page of the book you could rip out, and there was like these grant hotlines that you can get, and you would call and you would pay them, and they would supposedly find you this grants from like Minnesota to start your business. That was just all. It was a fallacy. It wasn't true. It was just a money making scheme. Today we know that grants are available, right? We're going through it. It's not just my first level clients, right? Now my entrepreneurs are in the first cycle of business ownership. My businesses that have been around for 40 plus have received grant money. The PPP program is a perfect example. It starts as a loan, and if it gets forgiven, it turns into a grant, basically. And you're not talking, you could talk from a couple of bucks to a couple million. So, and so it's a different world, and I think that's why it's so important to have these talks. It's always changing. I wish I could tell you that when I started doing this 20 years ago, that it's exactly the same. It's not, it's always evolving, but that's why it's important. If you think, you're always researching, you're always looking at what's out there, because there's new programs popping up.
Yep. No, definitely a lot going on. This is a unique time, so
Yes.
Definitely take advantage of it if you can.
Absolutely.
I would have to say, you could complain a whole bunch about our government, but I think from the business side, they stepped up, and because a lot of businesses would have been out of business if it wasn't for that stuff. So, and that's both parties, continued through, but yeah, I mean, it was impressive that they were able to come up with something that worked so well. We'll see down the road what it costs us, but
Correct.
but at least it seemed to work, for a lot of people that I work with and interact with.
Sure.
So cool. So, definitely, we're covering some great stuff, and, we're getting great comments from people who are tuned in, and we always appreciate your comments, your feedback, your questions. We're doing this for you. Like Alex and I know this stuff, so we don't need to be on here talking about it for ourselves. So this is for you. And we appreciate you taking time out of your evening to join us. One thing, Alex is here tonight, but you can actually meet him in person next week. Those of you who may be aware, I'm doing my Small Business Power Breakfast and Conference, which I've been doing for, almost over 10 years, which is incredible. And so this one is actually probably going to be the best one. So it's a full day conference. We've got quite a great complement. We've got breakfast speaker, a lunch speaker, 2 panels on one on financing, and Alex is going to be on that panel along with people from different institutions at different stages in the financing process. Jimmy Newson is the impact influencer. He's going to be talking about digital marketing and what every business owner needs to know about digital marketing, and facilitating a panel on that. Precious Williams is the killer pitch master, so she's going to bring it. And John Kennedy, CEO of NJMEP, which has done some great things for manufacturers throughout the state. And really, he's a great business person. I've interacted with him a lot. And so this is going to be a really powerful event. And if you've never been, let me give you a taste of what it's going to be like.
That's cool.
Pretty good. How about you?
Pretty.
Hey guys, I'm an entrepreneur. I'm looking for a place to grow my business and to network. Where can I go?
You've come to the right place. You should be going to the Power Breakfast.
That's right, Andrew. The Power Breakfast is the place for entrepreneurs and small business owners to access the expertise, tools, and resources they need to compete effectively.
So this is my first time being at the Power Breakfast, and it's just amazing to be in a room full of powerful people in the community. Seeing the economic development that's going on in the city is amazing. So I'm just so happy to be here. It's my first time here, and I'm definitely going to be back.
Good day, everyone. Hey. It's your girl, Precious Williams, the killer pitch master, and I can't wait to see you at the Small Business Power Breakfast and Conference. Be there or be square. I know you're going to be there.
If you are looking to increase revenues, improve profitability, and or obtain financing for your business, you need to check out the Power Breakfast and Small Business Pro conferences.
My name is Andrew Frazier. One of the things we're here to do is supercharge your day.
Today's Power Breakfast has really been a phenomenal experience. I think it's exactly what business owners need, some true guidance of people who are genuine and really are leading them in the true direction of business growth and expansion.
The Power Breakfast is so important for the entrepreneurial community because it gives the various business people who come together an opportunity to interact and also do some business.
These events, hosted by Andrew Frazier, President and COO of Small Business Like a Pro, will supercharge your day.
Great. So, definitely we do supercharge your day. So we deliver on that promise. And if you're here in New Jersey, it's going to be in Kenilworth, New Jersey, next Thursday, 8 a.m. till 4 p.m. But you can feel free to come for the morning or the afternoon or whatever session's most interesting to you. And actually, this time we're actually going to live stream it for the first time. So you have that option as well. So I'm going to put that info in the chat. There's a link to register if you want to come live. And then there's going to be a link to the live stream if you want to register for individual sessions. So definitely, we have a great lineup, and looking forward to a great time and a lot of learning and a lot of networking. It's directly led to tens of millions of dollars in financing and also economic opportunities for businesses who have come. So definitely, if you're going to make it, if you can make it, come in person. There's nothing like it. But if you can't, you can still learn some of the key messages from the live stream. So excellent. So Alex, we covered out of the pray, we covered the P for prepare, we sort of covered the R for research. So now assemble. I think that a lot of financing never happens because all the documents are never assembled and submitted, or they're piecemeal and they get lost on someone's desk. So can you talk about that and the importance of that?
Sure. So we have to keep in mind that when the people the bankers who you usually meet with, they're the upfront face of the lending institution, which means we will be doing upfront analytics on what financial information you give us. That being said, when it actually moves to the underwriting department, which is the bank's we'll call them the due diligence arm of the bank regarding you as the business owner and all the financials that you give us, if a package is not complete, they're looking at hundreds of packages at moments in time. And think about your stack of paper and multiply that times 100 on someone's desk or on their computer. What ends up happening is if you piecemeal it, they look at it, they look through it, X is missing. They put it to the side. They reach out to me. I go get X for them. Then I send them in X whenever the client actually provides the information. And then what happens? Well, what happens is I may hand that information over very quickly, but the underwriter is not picking up the file again very quickly. They're going to finish up the one that is complete. So the assemblance of all the information up front all at once is extremely beneficial for really a timely underwriting of your project or your financing needs. There's nothing worse than having to tell a client, we don't know yet, we're waiting for X, we're waiting for Y. So it's very important. Now, I'm not sure how other bankers do it, but I assume it's pretty similar. All banks have a checklist. The requirements are all pretty similar. The only thing that may change is a personal financial statement. The format's pretty much the same. It's just going to be with a different bank name or institution at the top. But primarily, the package they put together for a lending institution will pretty much be the same at all others. So what I tell people is, when you put that package together, keep it together, moving forward, right? And every year as you get the financials, put them in that lending package. So you have that lending package ready to go. It'll save you time. It'll save you probably a little frustration looking around for things. And more importantly, you're going to keep the bank very happy because you're going to be like, I need this. Here it is, Mr. Banker. We're all ready to go.
Excellent. I couldn't say it better myself because, that is critical. That's one thing I help people with. So before I come to you, I make sure everything's together. And that makes your process better. And the other thing is, you're looking for financing, but your timeline doesn't really start until they get the information.
That's a very good point. So the day you meet me, that's not the day the clock starts. The day you send me everything, hopefully complete package. That's not the time starts. Because you initially give me a package, I'll review it, and I'll probably release some sort of what's called a term sheet, which is the initial stage of a bank or a lending institution. Other names for it is letter of intent. It's just the structure and what the bank feels comfortable offering to you. Usually you have to sign that, date that, and return it with some type of deposit sometimes, standby deposit, and the completed package, right, if anything is missing. That's when the clock starts. So you're talking about many conversations, maybe many days in between. So the worst thing a client can come to me as is say, Alex, I need the money yesterday. I put a deposit on a truck, and I got to pay them next week. That's the worst, because whenever you put that undue pressure on yourself to come up with that money, things fall through the cracks. When the moment you put that undue pressure on the bank, things always will go wrong. Things will come up. The normal process will probably find something to elongate itself. And what ends up happening is you get frustrated, the banker gets frustrated, and the lending institution may turn it down just because, of timing issues. So it is important, again, planning ahead, being ready, having that packet ready to go, and giving yourself time as the borrower that it's not going to happen instantaneously. Moreover, now after COVID, things are taking even longer. And a lot of times it may not even be bank related. If we're talking about state entities, pulling reports, pulling title searches, ownership searches, whatever it may be, there's a lot of third parties involved, appraisal companies, right? So there's a lot of people that are also working a little bit slower after the pandemic. So you just have to be cognizant of that and be prepared for it.
Okay, no, great points. So definitely. So like you said, it's not like it's a secret, the documents that you're going to ask for are. So there's no reason why you can't put them together in advance.
Correct.
And, if you need that, we could provide that for you.
Absolutely. And there could be simple outlines, right? So if you're looking for a mortgage, I can tell you a very generic list of what they're going to require. Things that come up, such as fully executed contracts for the purchase, right? Sometimes we have borrowers who come to us and say, "Oh, I'm going to buy this building." They have everything but an actual signed contract because they're trying to get a pre-qualification that, again, does not truly exist in the commercial lending world. So that will be something that will impair the whole process.
Right. And
sorry, go ahead.
I was going to say, you work with a lot of people, and there's documents that you request.
Correct.
What are the ones that are usually missing or the hardest ones to get from people?
Probably our a debt schedule, which means all the current debt an organization or business currently has, outlined on one document with date of initial exposure, which means initially when they got a loan, date of maturity, the rate, the monthly payment, because these are the type of numbers that we need to calculate debt service or cash flow for the lending that you're applying for. So that's one of the documents that seems to always be falling short because it's one document, but you're gathering it from multiple places, right? You may have multiple loans. So that's one document that's important. As I told you, the personal financial statement, that's an important document. For some reason, I think the document's a little bit overwhelming because of all the information that needs to be provided. And I think these are one of those documents that you should be updating on an annual basis. So you don't have to redo it all every time that you want to finance. You have the basics and the gist of what your personal financial statement looks like. But every year as things change, you can just update it, and it's not such a task. Tax returns, I think that's a little bit easier because most people either have a copy or they request it from their account or their attorney, and that's just sent over. That's pretty much it. I mean, some if like we are right now, where tax returns for 2021 may not be ready. Getting interim financials, internally prepared documentations or financials, income statement, profit and loss, balance sheet, all these type of documents that are provided or prepared internally. Sometimes it may take them a little bit of time to get. But aside from that, I mean, it's pretty simple.
Okay. So it's definitely doable, but start early, get the list early. Like you said, have it ready before they need it, because there's nothing better than him to say, "Hey, I need these documents," and he gets them that night. Then you're going to be like, "I want to work with this person. I want to get finance."
Absolutely. All the people who I meet with who historically will give me their information within that first week or so, those are usually the smoothest loans that I have. The people that I have usually a very long ongoing conversation and always requesting things, that's usually the ones who are going to be a little bit more problematic.
Yeah, no, definitely.
Because we also have to understand it goes through my initial analytics just to make sure it looks feasible to the bank. I do my own risk assessment for the bank, but then it goes to another department that doesn't know the person, doesn't know you as the applicant. And then they're going to ask questions, right? There's going to be questions that are going to come out of there that you're going to have to answer also, or maybe get, right? Maybe there was something, perfect example, PPP money, right? The EIDL loans. We need to see documentation on that. We need to know what you signed from the SBA, right? So those are documents that most likely, not all the time, but sometimes the underwriter will request. So again, keep that file ready with all the things that you have regarding lending, available to you.
Okay. No, it's great points. And, that made me think of something, that's, number one, you mentioned the personal financial statement.
Correct.
And usually it's good to get help on that, because most people I work with, they would have filled it out and made themselves look worse than they should have.
I think you hit the nail on the head, as they say. I think most people are shy about putting what they have or what their assets are, and strangely enough, not so shy about what their liabilities are, right? So it always makes them look worse. Assets that you have can range from obviously cash, stocks and bonds, which are liquid items that the banks really like to see. But it could be actions in what we call non-marketable securities, like your cousin has a plumbing business, but you help him start it up. So you're a part owner, but you're a silent owner of that. That's an asset. Art, jewelry, people, throughout their lifetime accumulate all these things that have a worth, a value. It is part of your asset. It's part of your personal financial statement. So it is important to reflect this all that you may have.
Right. And all the debt needs to match your credit report.
That's the most important part. If you owe $50 to your cousin, don't worry about that. But if you owe, $50,000 to your bank, please make sure it's on there. Loans to life insurance. That's one of my favorite things that, oh, that's right. Those are very important items. When you're making a monthly payment, who you're making it to. And if they're reporting it, one important thing about the credit report is it's free to report when you don't make a payment, and it costs money to report when you do make a payment. So it's important that everything is being reflected, right? Because if you ever missed a payment in the last 10, 15 years, it's going to come up on that report. So it's just important to show everything because, again, like I said, that credibility pillar, that's our first litmus test, right? We look at the PFS, we run your credit report. We want to make sure everything on your credit report that you owe is there on your PFS.
Okay, excellent. So one thing that I hate is like every hour goes so fast. So we're bumping up against the hour, and we're just getting started.
Yeah.
But definitely you can come check Alex out at the Power Breakfast and Conference, live or virtually through the live stream. Definitely there's so many things that can be helpful for you when you're looking at this. So encourage you to participate. I encourage you to learn more. I invite you to reach out if you have questions. Definitely, I'll talk to you. Alex will talk to you.
Sure.
Bankers love to talk to you when you're not asking them for money. So you do it now so that when you're asking for money, they know who you are and you bring them what they need.
Yeah.
So, do your research.
Andrew, I'm thinking, with that, maybe what we do for the conferences, I prep, for some of the financial vehicles that are out there that are most common. What are the requirements for some of those? What it would actually involve in terms of a package, right? Because as we discussed, and I know we're running out of time, but mortgages, lines of credit, equipment, term loans, they all require a little bit, there is a general package and then some supplemental things that are needed for each one. So maybe, we put a little list so people can just pull it off a page and know exactly what it is that when they're looking at these type of vehicles.
Actually, that would be super helpful.
Yeah, I could do that.
That's great. So hang on for a couple minutes, Alex, as we close out, and let's see what we got. Got a few comments.
Sure.
So, and let me, since we're coming up on 9, I'm gonna break this out. So definitely, Alex, it's excellent. So come to the breakfast or do the live stream so we can make sure you get access to the checklist. As you know, each week we have great guests, and next week is similar as well. So next week our guest is Jimmy Newson, the impact influencer. We're going to talk about creating content that converts, because at the end of the day, your job as a business owner is marketing and sales. And a big piece of that, especially in the current environment, is content. So having content that converts is critical. And Jimmy's like tremendous. So we have him next week, and then actually he's going to be moderating a panel at the Power Breakfast event as well. So definitely check that out. What else we got for you? Definitely. I also want to let you know that we had a episode on the metaverse, and actually each week now we're broadcasting live in the STEM City metaverse, as well as here on LinkedIn, Facebook, and YouTube. So really just getting an opportunity to get greater exposure and give people access to a lot of the information they need. So thanks for tuning in. And, one of the key things I always say, at the end of the day, the more you know, the faster your business is going to grow. So with that, we're going to say good night, and we'll catch you next week.
Thank you for listening to Leadership Live at 8:05, Talking Small Business. Subscribe to our YouTube channel and to the podcast on your favorite podcast platform. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.